Stocks are under pressure on both sides of the border at the open. Let's head to the trading floor in Chicago. Scott Bauer, CEO of Prosper Trading Academy, joins us now. Scott, everyone's been told to hold on to their seats accordingly. How do you see today playing out, and perhaps even next week once we get past this week?
Yeah, Greg, it's a little hard to hear you because the noise from the trading pits below me is so loud right now. But, I know we have this big panic sell-off at the open today. I actually am in the minority, and I think we're going to moderate during the day today. I don't see us recovering all of this. I don't see us maybe being positive. I don't think we're going to be down this much today. We've seen big panic selling over the last few weeks going into the weekends. I think this one's going to be different today, and I'm not calling a bottom in the market by any stretch of the imagination. I just think things are going to level off, that some of the panic that we have seen, and that is really what has caused this sell-off, right? It's the unknown, the psychology of trading, the psychology of any situation. When there's fear, it's usually because of the unknown, and that's what we're seeing now.
Now, obviously, through the tough times we've had over the past decade, the U.S. Federal Reserve always seems to show up and, make everything right. Is this the kind of situation where monetary policy can really make that big of a difference? I know the markets would probably get excited by a rate cut, but at the center of this is a viral outbreak.
Exactly, and I don't see that. I mean, they have to react. They have to do something. They cannot wait to be data dependent in this case. However, Greg, let me ask you, are you going to stay home from going out somewhere because interest rates are 1% or 1.5%? That's going to be irrelevant, to the consumer, to the everyday layman out there. So yes, it may help the psyche of the market, but in truth, this is not so much a financial concern outside of, yes, we know companies are going to have to lower guidance, this, that, and the other. Like you said, this is a viral concern right now.
When it comes to that call from Goldman, basically saying the coronavirus will hit the bottom line and they're expecting zero profit growth, is that a little too excessive to the downside, or do you think they've hit the nail on the head?
Well, I think it's excessive in a real bad case scenario, because that would mean that this virus is not solved or hasn't been tapered off, or we don't see some end of the road here by the second quarter of this year. So if we get to June, Greg, and we're in the same position we are now in terms of not being able to contain this, in terms of not seeing, any sort of upside to this, then yes, they may be right. For right now, I think it's too aggressive of a call. And I'm a former Goldman Sachs trader, by the way.
Okay, a former Goldman guy, too aggressive of a call. When people take a look at a plunge like this, a correction in such short order, such a short time frame, some people start wondering, where is the buying opportunity? Where are the signals? Are we just a little too volatile right now for anyone to feel safe about stepping in a major way?
So it's hard to look at any signals. It's hard to look at any technical or any fundamental signals when trading is totally based off of fear. That being said, how many people do you know, how many fund managers, professionals, even just the average retail investor said, all right, if we dip 10%, if we dip, whatever, we're going to get back in. I'm not advocating take all of your cash and get back in right now. What I'm saying is look at some companies that over the long haul not only can, probably weather the storm of just a catastrophic potential event like this, but companies that have strong balance sheets, companies that we know are tried and true, a Microsoft, even an Apple, and people are going to say, how can you like Apple because of the supply chain constraints? So I think there's companies like that where, yes, you need to start buying a little bit. Not everything. Buy 10, 20% of what you'd want to allocate right now. And if we go down another 10% in the market, do it again. But this is an opportunity.
Okay, interesting for those big names like Apple and Microsoft. Obviously, we're just showing the audience how hard those stocks have been hit over these concerns. Little bit about the commodities trade. It's been an interesting space. There's a lot of it that makes a lot of sense considering the importance of China to the buying of actual physical commodities. But gold, I keep trying to wrap my head around what's happening on gold this week. What are you hearing?
I'm hearing the same thing that you just said. And what people believe is it's just a matter of profit taking, that maybe gold was the leading indicator along with the bond market. Gold was the leading indicator. And now that we've had maybe the tip of the panic here, and I don't know that it is, that's why we're seeing some profit taking, because based on what's happened over the last weeks and months with gold and pretty much overall in the commodity space, you would have figured gold could have been trading as high as 1,800 maybe today, right? But we're seeing a sell-off, and I think that's just profit taking.
Now, at the core of this, of course, are headlines. Headlines. We talk about the fear. The fear seems to be driven by everyone's just clinging to that next coronavirus headline. Does that just make the job so difficult when you're trying to figure out what to do next? You gotta. Who knows what's going to break in the next 10 minutes?
It sure does, because I'm like everybody else. I'm refreshing my news feeds literally every 30 seconds looking for the next bit. So, this is a market right now where somebody that wants to get in, you have to be longer term. Don't look for the market to pop back 5, 10, 15% in the next couple weeks. I'm not saying that can't happen. Don't have that mindset. You have to have a longer term mindset. You have to have a plan of attack here, and you have to be willing to dip your toes in a little bit and accept a loss if we go lower, and then dip in a little bit more.
Scott, I can hear that room is alive with frenzied activity. I'm going to let you get back to it. Thanks for joining us.
Thank you.
Scott Bauer is the CEO of Prosper Trading Academy. He joined us from a very busy room in Chicago.